Alright, so it's been around 2 weeks since I released this video going over a brand new video series on the channel where I'm going to be starting a brand new stock market portfolio, depositing $1,000 into a Wealthsimple Trade cash investment account. And instead of the traditional narrative where it's me selecting the stocks and going over an analysis of each one, we're going to be flipping the script where it's primarily going to be you, the audience, who has selected the stocks that I'm going to be including in this brand new stock portfolio. Most of my content on the channel does actually go over individual stock analysis, and so I thought it would be really fun and interesting to mix things up a bit here on YouTube. And this also seems to have piqued all of your interest because I've had a lot of viewers voicing their approval of this video series down in the comments on that last video. So we had dropped a fresh grand into that brand new investment account, ready to be invested and allocated across the stocks of your choice. And I was really happy with the overall level of engagement that the video and the video series ended up receiving. Even though the video only got around 2,500 views, which isn't all that much, well, we got hundreds of comments and around 85 individual stocks suggested by the audience. So that is a little bit why it took me a bit more time to make today's video, since I had to sift through all of these stocks. And shortly after releasing that video, Wealthsimple Trade announced that they were going to be launching fractional shares on the platform. And this opens up a lot of possibilities because with only $1,000, there were multiple stocks that would just not make any sense whatsoever, or that just simply could not be purchased in this portfolio. For example, a Shopify, a Google, an Amazon, that all trade for over a couple $1,000s per share. These would never be possible in today's stock market video. And so this is really why I thought it would make logical sense to just wait a week or so that feature is implemented in the platform. With that said though, I've now had time to compile all of the comments, sift through the suggestions, and add them to an Excel spreadsheet where we can see clearly which companies were the most popular and requested to add into this new portfolio. There was definitely quite a bit more variety than I had expected in terms of the amount of companies suggested, and I did actually conduct some high-level research on every single one of these stocks, especially the ones that I wasn't necessarily familiar with, but a handful of stocks definitely led the pack in terms of what you all wanted me to buy. But yeah, so I split all of these suggested stocks into two columns divided into Canadian listed and American listed stocks. There were more Canadian listed companies, and since this is a portfolio built within Wealthsimple Trade, I am going to try to focus a little bit more on Canadian listed companies because this is going to essentially allow me to save on conversion fees if I were to buy American listed stocks. But yeah, so let's first take a quick look at all of these suggested stocks, starting with the Canadian ones, and by far the most requested stock was Green Lane Renewables, ticker GNR, with a total of 13 votes. By the way, I combined all those votes in terms of amount of new comments for a given stock and then likes on each one of those comments for that same given stock. Following Green Lane Renewables, we did have Well Health, ticker Well, at 8 votes, and then Power Corp and Lightspeed each with 7 votes. Storage Vault Canada and Drone Delivery both have 5 votes, and look, I'm not going to list every single company. If you want to see all of them, then feel free to pause the video at any moment. Now on the American side of things, quite unanimously, we have Alibaba at 15 total votes, making it the most requested stock out of all of these companies, both Canadian and American stocks, which look, I don't really blame any of you for suggesting this. This stock is showing tremendous value, as I recently outlined in this video right here, going over stocks that you should be adding to your watch list at the very least in the month of July and moving into August, because Alibaba, for example, is one of these companies that is showing tremendous value right now. Following Alibaba though, we're looking at Google with 5 votes, Palantir 4 votes, Celsius Holdings 4 votes, and then Apple with 3 votes. Again, there were multiple other American listed stocks suggested in that last video, so thanks a lot if you did end up suggesting a company. I really appreciate it, and make sure to drop a like on today's video if you're enjoying it up to now. Alright, so without further ado, let's actually start buying some stocks here. The market just opened. It's around 9:40 a.m. So yeah, they opened around 11 minutes ago. We'll be able to go ahead and purchase some of these stocks that I selected out of all of these suggested companies. And for the ones that I did end up selecting, we're going to be going over a quick overview and analysis of the company and really why I've chosen to include it in this portfolio. Also, I do just want to mention here that it kind of goes without saying, this video and this video series is really just for fun. None of this is any financial advice by any means. Make sure to do your own research if you are going to be including any of these stocks in your own portfolio. But let's get right into it. All right, so the first company naturally is going to be Green Lane Renewables, ticker symbol GNR. This was, I think it had 13 votes. So looking at it right now on Wealthsimple Trade, we can see Green Lane Renewables is trading for around $1.25 per share on the Canadian markets, up around 2 cents per share as of this morning's trading. And this is definitely a micro cap stock. We're looking at a company that has a market cap of $175 million, definitely putting it on the smaller side of companies that we'll be looking at in today's video. For those of you who aren't necessarily aware of what Green Lane Renewables do, however, let's quickly take a look at what their operations are. So it says Green Lane Renewables designs, develops, sells, and services a range of biogas upgrading systems worldwide. The company's systems remove impurities and separate carbon dioxide from biomethane in raw biogas created from the decomposition of organic waste at landfills, wastewater treatment plants and farms, and for injection food waste facilities into the natural gas grid. Okay, basically, this is a company that is trying to provide a solution to a certain environmental issue in relation to carbon dioxide from landfills, etc. So definitely an interesting company, and actually this is a company that was put on my radar a couple months back from a couple other YouTubers. So this stock though is down hard if we take a look from its peak back, when was it? Back in around February. It is down, it was trading for $2.80. So we're looking at down more than 50% essentially. And right now, what does this put it in terms of ratios and things of that nature? So it is an unprofitable company as of right now, meaning their trailing 12-month PE is inexistent. However, from a forward-looking PE standpoint, we're seeing a company, it is looking like it's going to be entering into some level of profitability with a forward PE right now of 42. What I found really interesting about this company though is just the level of growth that it is experiencing, and this is in combination to the fact that it's such a small cap stock. So if we do take a look at their financials, we can see that year over year, first of all, they're growing exponentially, right? $0 in revenue in 2018, 9 million in 2019, 22 in 2020, and now trailing 12 months, we're looking at $31 million. And then also from a quarterly standpoint, it is growing heavily quarter over quarter, which is something that I do want to see in a small cap growth stock such as this one. And since it's down so dramatically right now, this does put it in a territory where I have actually had it on my watch list for a while, and I am interested potentially in including it. And since all of you have been suggesting it so much, we're going to be buying some in today's portfolio. So let's go ahead and do that right now. I'm going to click on buy in the personal account. And for this, I want around 7 to 8% of this portfolio we're going to put in Green Lane Renewables. So we're going to put it at a limit buy of, $1.25, which is what it's trading at right now. And we're going to put how many shares? 60 shares is going to put it at around $75. So we'll put 65 shares for $81, and that's going to be around 8% of this portfolio. Continue. And yep, that's fine. Confirm the order. Sending the order right now, and we have purchased some Green Lane Renewables. All right, moving on to the second highly requested stock in the Canadian market, we have Well Health Technologies, ticker symbol WELL on the TSX. And this is actually a stock that I do already hold in my tax-free savings account. We have mentioned it multiple times on the channel since around a year and a bit ago. So right now it is trading for around $7.45 per share. And we did see a lot of run up for the entire telemedicine space as a whole in the end of last year and beginning of 2021. Since then, it has somewhat cooled off, and Well Health, for example, has been trending sideways for the better part of around over 6 months at this point. However, it is a company that is growing mainly through acquisition. This means two things. First of all, they are diluting shareholder value quite a bit, which is not necessarily beneficial whatsoever for current shareholders, because essentially they're diluting the the value of each share. However, they're doing this to raise capital in order to grow, yes, organically, but then also through acquisition, which they're doing quite aggressively. And so in the shadows, they're growing the revenue run rate dramatically, but this isn't necessarily showing up on financial statements as of just yet. Same thing really for CloudMD. But what I really think here is that as these companies start posting these revenues on their income statement over the course of this year and next, we're going to see the stock price reflect these revenue realities. Hopefully they don't continue diluting at the pace that they're doing right now, however. So this company is at around $1.2 billion in market capitalization. And doing some more recent research about it, I'm definitely still quite interested in adding it into this portfolio. So first of all, the revenue is expected to grow by around 70% over the next year, which is just phenomenal. Now, from an actual value standpoint, this is also a company that is still unprofitable. So we're looking at a negative PE or inexistent PE over the trailing 12 months. Right now, they do have a forward PE of 124, but we should still take that with a grain of salt because this is a company that's burning through a lot of cash through acquisitions. And this is also resulting in a net profit margin of negative 13% as of right now and a negative 14% operating margin. However, this doesn't mean that the stock won't see further growth over the next year, which is what we're targeting in this portfolio. They do, however, through all of this dilution and capital raising, have a fantastic current ratio at 4.18 right now, which is definitely nice to see. However, do keep in mind they are going to be using a lot of the cash they have on hand to further acquire other companies and grow their revenue run rate. So based on what I'm seeing right now though for Well Health in terms of their value relative to American peers and their level of growth that they're experiencing this year, I'm going to put around 9% of the portfolio in this stock right now. So let's go ahead and do that once again. It is trading for $7.49, so that is fine. Also in the personal account, we're going to do a limit buy. I always do a limit buy just because market, you never really know what you're going to get essentially. So let's put it in at $1.50. That's fine. Limit buy, and then we said 9%. So we're going to purchase. How many shares would that be? It's going to be around 13 shares. Yeah, we'll put it at 12 shares for an even $90 on the dot. So let's go with that. Confirm order, and there we go. We've just purchased 12 shares of Well once it does end up settling. All right, so moving on to the third stock we'll be including in this portfolio, and that was highly requested by the audience. It is Power Corp, ticker symbol POW on the Toronto Stock Exchange. Again, a stock I have spoken about, but haven't mentioned it in quite a while on the channel. Right now, it is trading for $38.86 per share, and this is a much larger company than pretty much all of the other Canadian companies that were suggested as the top suggested. So $26 billion in market cap. And, this is actually a company that is going to be quite a bit more stable than all of the other smaller cap stocks that were suggested. And so for this reason, I was actually pretty happy to see this company being suggested for this portfolio because it's going to add a little bit more stability and less volatility, I would assume, over the next coming months and year that I'm going to be maintaining this portfolio. As of right now, this stock has a trailing PE of 11.20 and a forward PE of 10. And they also have a really low price to book and price to sales ratio, as we can see right here, with relatively low profitability levels though at 3.6% in gross profit and 6.99 in operating margin. And as we can see from their financials, this isn't a company that is growing all too much. So relatively stable revenues over the past 5 years that have been fluctuating. However, over the past 2 to 3 years, we have been seeing an increase in top line revenue. What I do like about this company though, considering the type of company that it is, they do have relatively nice free cash flow figures year over year, right? So over the trailing 12 months, almost $10 billion in free cash flows. And this has been the case for the past several years. So a highly cash flow positive company here that we're going to be including in this portfolio. So since this is going to be pretty much more of the stable play in this portfolio, I was going to put around 9% of the portfolio in Power Corp, which would put it Well, let's see actually. So let's go ahead and purchase some shares. Once again, at a limit buy, we'll purchase them for $38 and let's put it at, we'll just put it at market price, $38.82. And this would give us around, how much? I said around 9%. So we're gonna buy 4 shares. No, actually 3 shares, 2 or 3 shares. So yeah, we'll put 3 shares on this one. Although that is gonna put us at more than 11%. So let's go with the 2 shares on this. Great, confirm that order. We just purchased some shares of Power Corp. The 4th stock that was highly recommended, once again, a company that I spoke about around 6-7 months on the channel, and they're kind of coming back here. I'm seeing a lot of viewers re-requesting these stocks. So we have Storage Vault Canada, ticker symbol SVI. Let's go take a look at that company. So the stock right now is trading for just under $5 per share, and it is a relatively smaller company at $1.8 billion in market cap right now. Basically what this company does is across Canada, they purchase personal storage locations. They're in pretty much every city, and this is the only publicly traded company in Canada, at least, that purchases these types of storage facilities that public investors such as you and I can invest in. So they do have really nice growth over the past couple of years. However, do keep in mind that this is the type of company that is also growing through acquisition mostly. They have been building, I'm pretty sure they've been building, don't quote me on this, some individual storage locations themselves. However, it's really through acquisitions that they're growing at this rate, right? So really nice top line growth. They are not profitable right now, however, so keep this in mind, but it has seen some very nice growth over the past couple of years. And what's actually kind of also interesting is that they do pay out a small dividend of 1 penny per share, which gives it a forward dividend yield of 0.22% as of right now. In all honesty, that is not at all why I would be buying this stock, but I do think we're going to be seeing some further growth in this stock over the coming year, or at least 6 months to 12-month time frame. Again, the company is not profitable at a profit margin of negative 22.29%. Operating margin is positive at just under 1% though, but nothing to really brag home about. This is a company that's just reinvesting as much of their capital as possible back into fueling further growth. And they're also raising capital through share issuances. So definitely be aware of that if you do invest in Storage Vault Canada. Balance sheet isn't too great. However, they do have a current ratio of 1.5x. So for Storage Vault Canada, I was going to put around 5% of this entire portfolio in this stock. So let's go ahead and do that right now. Personal account, we're going to do, again, a limit buy, and we're going to put the shares at $4.90, since I think it'll sell off a little bit over the course of the day. We'll see, and that would put it at around 10 shares, giving us about $50 in market value. So you know what, let's go with 11 shares just for fun. Why not? All right, confirm the order. I've just put in an order for 11 shares of SVI. If you're enjoying today's video, by the way, and you're seeing stocks that I'm buying that you suggested, make sure to drop a like and comment down below. The next stock on the list was Drone Delivery Canada. This is basically a drone delivery company where the overall goal is going to be utilizing drones for shipping packages across the country. And at some point in the future, I'm assuming it's going to be across North America and maybe even the world. Really good for e-commerce companies to lower their costs. Right now, though, this is a stock that is completely, or a company, I should say, that's completely per revenue, and they don't necessarily have any short to mid-term plans to become a company that is generating a lot of revenue. Yes, they have been signing some deals with companies in the future, and they are gaining approval from, for example, the Canadian government and stuff, but even still right now, this is a stock that I don't really want to hold for multiple years as it plays out, because this is a portfolio that I'm looking to make some nice returns in over the next 6 months to 1 year. So I'm just going to leave drone delivery out of this portfolio for today. The next stock though was Go Easy, ticker symbol GSY. If you follow my channel, then you're well aware of this stock. It is a stock that I personally hold in my TFSA and my other separate personal account. Really great stock. I've been following it since around the $80 per share mark. If you ended up getting in March 2020, then you have seen this stock appreciate by over like 200%. It's a really great company from a fundamental level. They are growing. Yes, the stock is growing quite a bit. However, However, it is also growing its underlying financials, and the ratios are staying relatively the same. If you want a full, not really full, but a minute or two analysis on that stock specifically, make sure to check out this video right here that I posted the other day. But yeah, it was requested by the audience, so we're gonna go take a look at it right now. GSY Go Easy, it is trading right now at $156 per share in market price for an overall market cap of 2.5 billion. Now here's the thing, all right, at $156 with $1,000 market or portfolio, well, yes, I do want to include it in the portfolio, but this would put it at around 15% of this entire portfolio. Generally, I don't like to have an individual position anything above 10%, and later on in the video, we're going to see this as well with certain other companies like Alibaba, spoiler alert, where it was highly requested by the audience, but this would put it at around 26-27% of the entire portfolio. But Go Easy, I'm kind of torn as to whether or not we purchase some right now. I do think it's going to appreciate, it's going to continue appreciating over the next year. So, you know what, might as well. We'll buy one share of Go Easy and include it in the portfolio since you had all requested it quite a bit. So limit buy, no, we're going to put it at 156, let's say, and 40 cents, and we're gonna buy one share of this. Whether or not this is a good idea or not, I'm not sure, and maybe I'll have to include some more capital to this portfolio. But we just did it. Order sent, one share of GSY, $156. The next stock that was highly requested is Dollarama, ticker symbol DOL on the Toronto Stock Exchange, and this is actually not really a stock I had ever really done any prior research on. We're seeing right now it's trading for around $57.40 per share for a market value or market cap of $17.4 billion. And this really seems to be the type of business that is necessary for a growing population of individuals who aren't necessarily interested in spending excess amounts of money on everyday items, right? So taking a look at this company's financials, we're seeing a trailing 12-month PE of 30.21, but a forward PE of 22.42. They also have a relatively low price to sales ratio, which I do like to see, and their profitability, although nothing fantastic, is still quite decent at 14.3% in gross profit margin and 20% in operating margin. So yeah, you know, this is a company that we're seeing some growth in top line year over year, which is not necessarily the fastest growth that we've been seeing. This is a company that's at 17 billion in market cap, but nonetheless, right, trailing 12 months, we have a company that's done 4.1 billion in sales, and then we're also seeing steady and nice increases in bottom line year over year. So this isn't the type of company that I think we're going to be seeing any type of explosive stock growth over the next 6 to 12 months. However, since it's a company that did really come a bit more on my radar based on viewer suggestions, we're going to include one share in this portfolio. So we're going to go ahead and purchase limit buy at $57 and around 40 cents limit buy, and we're going to buy just one share for around 5.7% of this portfolio. And then finally, the last Canadian listed stock that we'll be adding to this portfolio right now is Park Lawn Corporation. Ticker symbol, I don't even remember what it is, Park Lawn PLC, all right, PLC on the Toronto Stock Exchange. It is actually down today around 1.16% as we speak for a market price of $33.19 per share and a market cap of just under $1 billion. Now, Park Lawn Corporation is a company, again, I have spoken about around 6-7 months ago on the channel, and it is the type of company that it sort of flies under the radar because it's a pretty boring company in terms of what they do, right? They go ahead and purchase cemeteries, funeral homes, things of that nature, and they're combining them all together into one single company that is publicly traded on the TSX. So the stock has actually grown quite a bit over the past year or so. However, relatively steady growth nonetheless, and their price to earnings ratio is at around 35.5x with a forward PE of only 21, which is really nice to see. We're going to continue seeing them increase their profitability over the next year, which is something that for a shorter term investment such as this, and not necessarily short term, but for a portfolio that I want to see some returns over the next 6 to 12 months, this is what we want to see. Price to sell pretty low at 2.85, and then relatively nice operating margins, right, at around 15%, which is nice to see. And they have a great current ratio, balance sheet that is, in terms of short-term assets at 2x. So great company, and year over year they've been increasing their top line significantly. All right, look at this, trailing 12 months, 346,000 or $1 million, that is, because this is in thousands. And this is quite a bit since 2019, almost double growth, not double, but probably around 70% growth. So Park Lawn, pretty interesting company to include in this more growth-oriented portfolio. And we're gonna go ahead and purchase some shares of Park Lawn. Once again, in that personal account, a limit buy, and we're gonna put it in at just above market at 33, so it fills instantly. Because earlier, well, right now we have 3 pending orders. And yeah, I was going to put around 9% in this stock, 9% of the portfolio, that is, which would give us around a $90 market value. So we're just going to go with 3 shares at an even almost $100. Let's go ahead and purchase that. Boom, we've just added another stock into this portfolio, which is great. So right now we have 5 stocks. We have GoEasy, PLC, Power Corp, Shopify, and Shop, by the way, I just purchased the other day for fun. I purchased $1 worth, so it doesn't actually include or count towards this portfolio, but it kind of does. And now we still have 3 limit buys that have yet to be filled. All right, so now that we've had the chance to go over the Canadian listed stocks that we'll be including in this new portfolio, let's take a look at some American stocks. Now, since this is done though on Wealthsimple Trade, where trading American stocks will incur a conversion fee of around 1.5%, I wanted to limit the amount of American stocks to only 3. The first one being the most highly requested in this entire video, Alibaba, ticker symbol BABA on the NYSE. And this is a stock that I just recently did actually speak about in a full standalone video. Definitely check that one out if you haven't already, because we go through a full around 6-7 minute analysis of Alibaba stock, which has just been getting slapped over the past 6 months as a result of a bunch of different things, mostly related to overall investor sentiment towards this stock. With that said, it is showing nice value though, as the price just keeps tumbling further down and further down to a point where right now it's trading at $209, give or take USD, for a market cap of $566 billion. So by far the largest company that we've looked at as of right now in today's video. And here's the thing, right? At $209 US, well, we're looking at probably around $260-ish in Canadian, and then also tack onto that the 1.5% fee, and we're looking at like 26% of this entire portfolio in one single stock. And that's not necessarily something that I'm super comfortable with in any portfolio ever, have that much amount of capital in one single position, unless you are so bullish on it and this is really a company that you want to allocate a large portion of your funds to. But because it was the most highly requested stock, I am going to purchase 1 single share, and this isn't something I would recommend for any other portfolio, but we're still going to do it, and we're going to buy 1 share of Alibaba. A market price, limit price of $209, and like, let's say, yeah, 35 cents, whatever. At this point, doesn't really matter. And we're just going to do 1 share. So this is going to give us, though, a commission, so right, estimated exchange rate of 1.2954. So the fee is already included in that exchange rate, meaning that it's going to be around $271 in Canadian dollars. So we'll still go ahead and do that, but at around 27% of this portfolio. Not something I would really ever recommend, but there we go. We just did it for Alibaba. Okay, next stock we'll be looking over. This is a company that I've actually had on my radar for quite some time now. I don't individually own it. However, across some like S&P 500 stocks, well, I do have exposure to it. We have a Google, well, Alphabet, ticker symbol GOOG, and it was also highly requested by the audience, as we saw earlier, right? So it trades on the NASDAQ, market cap of $1.77 trillion, which is absolutely mind-boggling. And right now, 1 share of Alphabet is trading, or actually, let's go to this one right here, GOOGL. right? This is the Class A shares, and the reason why we're going to be able to include it in today's video is because we can purchase fractional shares of this stock. Wealthsimple Trade just released this new fractional share feature, which in this case is great. All right, so one share is trading at 2,514, give or take US dollars, up just under 1% for the day. Now, typically I'm not going to purchase stocks on a day when it is up quite a bit. However, for today's video, we are again going to go through with this. Google is a fantastic company, right? Everything from their top line growth, bottom line growth, their cash flows, their balance sheet, everything about it is absolutely phenomenal. If we take a look right here, we can see over the trailing 12 month, just under $200 billion in top line revenue, which has just been growing steadily year over year over year. Really one of the most fantastic companies from an actual business model standpoint. Google is an absolute beast. Their operating income also is just been growing steadily year over year. Same thing for their net income. And then their balance sheet is also fantastic, as we can see right here, with a current ratio in the waters of 3.1, $135 billion in cash. It's hard to even wrap your head around this, but yeah, even from a profitability level, right around the 25-26% range for their operating and their profit margin. So really nice profitability. And once again, forward-looking price to earning is quite a bit lower than what it's trading for right now at 33.5x. So with all that said though, I was going to allocate around 8-9% of the portfolio to Google stock. And so we're going to be able to purchase fractional shares of this. And I'm going to go ahead and do fractional buy exactly. Right. So the fractional buy, because we want to put around 9%, I'm going to purchase around $90 worth. So that's going to be 0.0358 shares. Now, do keep in mind that fractional shares, you're purchasing a portion of one single share. So that's exactly how it works. Instead of purchasing one entire share at over 2,500 US dollars, you can now access a much smaller portion of the given stock at the exact same value. This has no impact whatsoever on the value you're getting for that share. It is literally just a portion of that entire stock. So at $90, yeah, we're getting 0.0358 shares. And if we click on continue, it tells us right here that right now the exchange fee of 1.5% is already included, and the estimated cost is around $116.59. And since this is a fractional buy, it's going to be filled at the end of the day. Only one time per day are the fractional buys executed on Wealthsimple Trade. So I'm going to confirm that order, but it's only going to fill at the end of the trading day. All of this to say though that at this point, this is what the portfolio looks like. So we have 1, 2, 3, 4, 5, 6, 7, and then 3 more stocks are going to be added to that. So a total of 10 stocks in this brand new portfolio. And look at that, it's already up around $3 on the day. We're making bank here. But no, I'm going to be doing updates probably on a weekly basis about this portfolio, buying and selling certain stocks depending on what you all end up commenting down below in today's video and moving forward in the next videos within this series. So I really hope that you enjoy this type of alternative stock market portfolio construction series. If you do enjoy it, make sure to smash the like button. That's really all I ask in return for liking and watching my videos. And if you have any other suggestions for stocks, maybe over time as I add some more funds to the portfolio, let me know down in the comments and we can open up a discussion on that also. And with that said, if you want to create your own stock market portfolio, then make sure to check out all of the resources that I use and recommend down in the comments. You can open up, for example, a Wealthsimple Trade account like we're using right here and get $25 for free when you sign up. Or you can open up a Questrade account using that link down below and you'll get $50 in free trade. So definitely check out all of those resources down below. I really hope you enjoyed the video and I will see you in the next one.